patience in the holding pen while we did our makeup and combed our hair, or maybe we didn't do that, I don't know. Anyway, this is silver. I'm going to come back at silver for you for a little bit of a tease and a little look. But I am going to talk to you about Ethereum. That's right, Ethereum. And we're going to take a look at Bitcoin, and we are going to do Ethereum. So what I want to do is get a little chart of Ethereum up almost straight away, USD, and we will tell you a little bit about this particular alt and why it's interesting for us. And more importantly, I'm going to also say to you, there is a small chance. So I want to talk to you about the crypto mega bull and how we're seeing the market. So let's have a discussion. This is crypto. This is Ethereum. Let's take it off the charts for a while. Actually, Alex, just give it to me. So all about this face to face, no looking at screens. Let me talk to you. This is the view I want before I bedazzle you with charts and lines. So here's what happens in markets. This is what they like to do. The best thing is to be early to a trade. Now, the problem happens when you're executing being early to a trade is that you end up in a situation where it's hurry up and wait. So we're looking for a breakout on the super macro, big time frame of Bitcoin. And by most draws, we're probably not quite there yet. We're not quite there yet. So if I were drawing in the sky, and we'll look at this in proper format, but just stay with me on face view here. We've got this big structure, 20K, down to 3K, up to 14K, down to an extremity spiller of 4K, and then a snapback bounce. And we've actually had two very big impulses. So overall, how am I set and playing this? The key point is that we're getting to the interesting bit. Now, normally, in a perfect world, if we get the idealized structure on Bitcoin, and I'll tie this into why it talks about Ethereum, why I'm discussing Ethereum here today, as well as Bitcoin. I've typically spoken about the dominance and been mainly on Bitcoin. You can chase into real small coins. One or two of them on the coin market cap have kind of had a bit of a pop, but they're not consistently reliable. You've got to choose an alt very carefully. And whenever you choose an alt, there's a couple of things you have to bear in mind. The alt market generally, unless we're in a very well-established bull, does not go single-mindedly up if Bitcoin isn't playing. If Bitcoin isn't playing, is flat or down for a sustained period, you will not have an open-ended alt charge. Unless you're in the runaway final stages, and even still, Bitcoin came back into the race. There was a period in 2017 where Bitcoin lagged for a while. The first half of 17, I remember it. It lagged. It wasn't not bullish, it just was less so. It was shedding dominance, and all these newbies were popping at far faster rates, and you've never had it so easy to make dumb money, and you never appreciated it enough to save any of it. That was how it turned out. Let's be frank. I know people who put in millions in dollars in the likes of Veritasium and other small caps, and were just making easy money until you get out. You've never made easy money until you've got out. But anyway, too many sidebars here. Let's stay with the main point. We need the God market to perform at least well or stably and broadly to the upside. And I've already told you we've got two massive impulses. Now for HVF method, that's a big part of the pattern now done. It's the longest time frame part of the pattern now done. So now we're getting into the dangerous part. The dangerous part is dangerous for a number of reasons. The biggest danger is you miss the damn trade. So first of all, the three-pot strategy, the cold pot, the lukewarm pot, and the hot pot, highly leveraged. The game is do not miss out at investment level alone, because at an investment level you can hold. There's no cost of holding. You can hold it in your wallet. You're not borrowing any money. You're not getting any charge. And if it eats 30% and you wear it and then it goes back and then goes beyond, you end up to the upside. So that's the investment part. Right now, investment pot, Bitcoin long for me. But are we done? Well, we don't know. This is the tricky part. And so it's kind of like the game. I put a game in front of you all with 5 cups. Under one of them is a gold nugget. Under one of them is a gold nugget. We're in the 5 cup stage. And what sometimes happens is patterns take ages to form. As the first impulse, you remember it was a huge blow-off bull and then a long year of bear market. It was awful and it was down and everyone was so miserable, and all the crypto kids lost 98% of what they had at the highs because they were in all the rubbishiest alts that had just had a major ICO pump, and the guys had thrown a bit of money at creating some momentum and getting everyone to chase in. And then they hung on doggedly all the way down and ended up with 2 to 5% of what they might have had at their highest value point, which was probably December 2017. So that is a bit of a tragedy. Then we had the second push-up. It came a little quicker. It exhausted a little sooner. Most people thought this is back to all-time highs. We called the shooting stars. We called the first inverted in a new trend. We said that has a target of 6.8. You will make 6.8, and there will be a possibility of overperformance to the downside. We've now had all of that happen, and you made a capitulation absolute low at 4K with a snapback rally in the crypto world as the printers went brrrt, and off you go. The fiat proliferation game went into full upswing. This is the long part of the game. It's tedious and takes a while, especially when you're talking on this huge time frame. So let's be clear here what I'm talking about. This should give you sweaty palms, lovely people. Essentially, we are talking about the single biggest, longest, probably upside continuation pattern of a macro scale ever to be brought to bear on the crypto market that has a lifespan since 2009 to this day today. 11 years, and we are calling the largest, single biggest macro time frame continuation pattern to the upside. That is what we are saying. We are absolutely clear about this, and we're also warning, because of its scale and because of its uniqueness in nature, and nothing of this scale has come before, we are also warning that overperformance that will well belie a target of around 25,700 is indeed highly likely. And that overperformance could see an absolute moon spike that will, be the second coming of the NASDAQ in .com. So we can't put a number on that. We have a mechanism on when we would eventually exit and how we would stay. And we would also take a small amount off at our key target. So that's how we are playing it as HVF traders in my premium community. It's discussed, it's well understood, it's scenario cast. I've given you a little insight into what is coming. So this is huge. Now, what's the worst thing that could happen to you in this environment? So I'm all about understanding risk. What's the biggest risk here? In actual fact, getting in too soon and eating some red is not your biggest risk. What do you guys think is your biggest risk? I'm looking at the comments now on my other laptop here where I'm following the live stream. Let's hear it from you. What's the biggest risk in the event that I've just described? Go on, take a minute. I'm going to have a sip of water. I want to see. Answers in the chat. Max says FOMO. Brendan says not getting in at all. Jules says biggest risk, sell too early. Also a good point, but not the same one. The first two are spot on. Market runs away without you, says Thorne. Well said, sir. Missing the trade, Cameron. Getting out too soon. There's a consistent theme there. You guys are basically on the money. You get it. Missing the goddamn trade. You are now going to have the biggest event. Eating red, if you're in investment or you're correctly sized, is not your biggest problem. You can hodl your way out at investment if you haven't got the perfect entry. On low leverage, if you have stops that can be pretty damn deep, you can get out, you can take a small 1-2% and you can enter again. The biggest thing that is your highest possible risk is missing this trade. And I'm here to say to you, the game for the third impulse has begun, And the greatest threat is no longer your money management, what you could lose by being in, assuming that you understand money management, you are not oversized. By the way, if you don't, you can book in, you can grab our mini series for free, you can hit get started on the links below, have a call with us and join our community if you need to understand. We have spreadsheets, etc. for that. Not losing too much money is absolutely critical, and in no way am I undermining the value of money management. I'm talking about the opportunity, the potential to miss this opportunity actually is the worst outcome for you. Of course, blowing up your account because you chase in too soon, too large, and get shaken out on a minor pullback is an absolute disaster. So money management, assuming you understand principles of money management, that is always assumed and is always there. So if you're sensible enough not to blow your account due to sizing, and you recognize there can be pullbacks, there can be choppy, the game with being early often turns out, hurry up and then wait. That was a classic saying in army. We were always told to be ready at 4:30 in the morning in the parade ground, and you'd stand and watch the sun come up while the captain, the sergeant, and everyone else had their breakfast and left you standing, meeting the birds as they were just dusting off their feathers, and then came and said hello to you at about 8 o'clock after a few guys had fainted in the morning sun without their breakfast. Hurry up and wait. That is often what it is when you're trading breakouts too. However, there is that small risk, and that's the first cup of the 5 cups. Every now and then, if there's a gold nugget, and I'm saying it costs you each time you lift a cup, every now and then you might pick the right cup first time, and the gold nugget comes early. And what happens if it is? So here you are, I'm charging you each time to lift a cup. You may take 5 goes, and the cost of each attempt may actually be more than the gold nugget you achieve if you only get it on the 5th cup. But you may get it right the very first time. It might rush to you. And in this insane world environment where we are so bereft of crazy news, crazy announcements, if you followed my previous live stream on the Market Sniper, we just threw out 750 billion euro, by the way. When I say they approved the distribution of this amount, and it will start seeping through. In the same way, those trillions that were agreed all seem in dollars, all seem to have seeped out, that even the Turkish lira now has, the Turkish central bank seems to have enough dollars to knock back its currency all the way down, and we're in this pullback period, and they put the genie a little bit back in the bottle, even though it's halfway up towards its target and being kept warm. It has been put on ice for a while. So it is hurry up, then wait. You catch the break and then it stops. And they stop the music, and then you've got to have a chair. Otherwise, you're the last man standing and you're out of the game. So every now and then, the first cup comes. And what can happen is you break from pretty much some point where you didn't have a clear, defined, and final third impulse. And third impulses can often be very soft and very minor. And as a result, a lot of people hurry up and wait, and then they get bored. Too many times of crying wolf. If you follow, and if you're a retail crypto guy, you've been called on all-time high chases. This time is the all-time high. This time's the all-time high. It's a case of you become anesthetized to the cry wolf until the day the wolf shows up. And boy, then are you caught without your rifle, because you got anesthetized to it. You got anesthetized and bored. You got told it was going to be an all-time high. The second time it went up to RH2 when we said no, you got plenty of time. This is probably a continuation pattern. This is a first inverted in a new trend. It's going to go down. Don't be sitting on FOMO alerts. You're running your nervous system down. You're anesthetizing yourself to the key moments. We're now here to tell you we've passed the line where the critical window is now open. That doesn't mean it happens the first time. Usually, on average, it's the third cup you pick that has the gold nuggets. Occasionally, it's the second. It could be the fourth, but generally, you're in the middle there somewhere. You're in the middle. It can delay and be extended, and then you're only on the 5th cup, and then you've spent more in lifting cups than you're going to get in your gold, but because you've done it, you've got to see the whole thing through, and you lift that 5th cup. We are here at the 1st cup. So let me be clear. It doesn't mean it's going to happen. It doesn't mean it's going to happen this weekend, but it means now you are at high alert season. It's kind of like waiting for an attack. You've heard that they were in the area. You've heard they were in the vicinity. They've been tracked as they've been coming to you, the enemy, in their tanks from far away. They've been strafed by your planes. You've done all you can to thin them out and reduce them and demoralize them. But now they are come and they're in your areas. One of these mornings at the crack of dawn or as dusk hits and the light changes, the best time for attack, you're going to get revved, baby. And in the same way, this is where we're at with the current situation. So I am not calling first cup is a gold nugget. I am telling you the game is starting now. The game of Russian roulette, where you pick up the pistol and one of them has a round. Who remembers the Deer Hunter, the movie, the classic scene of them sitting there and having to shoot two friends being made by the Vietnamese? Click, no round. The other guy grabs the gun. Click, no round. There is one round in there in what is probably a 6, maybe a 7 shooter. Click, no round. They are absolutely sweating. At any minute they could be dead. And he's sitting there. It's gone 3, 4 times without either of them shooting themselves. And he is expecting this to be the one, and he turns and he actually shoots the Vietnamese soldier and they break out. That was an incredible scene. And in some ways, we are here. So the first one is not necessarily the chambered round. The first cup is not necessarily the one with the gold nugget. But I'm here to say to you, it's hurry up and wait, and then suddenly it can be surprise attack. Cry wolf, cry wolf, cry wolf. Everyone numbed, everyone numb. Catch him on the surprise attack. Remember, the market doesn't always want to make things absolutely obvious. So ideally, we would like a nice third impulse. We'd actually like a down leg. So let's bring a bit of charts back into this now. Now that I've given you that opening monologue, we'll clear the lines a little bit so it's not too intense for you. And let's overview this structure. This, broadly speaking, if you ask me, is first cupdom and we're not quite ready. However, it has, on this leg up, given us sufficient of a move up against this downtrend, and we have qualifying percentages and everything, that we could have our third high. The question is, has it given us enough of a down leg? And broadly speaking, most times I'll say to you, not yet. Only if it's doing a cheeky surprise attack that's going to catch everyone by surprise. My expectation, and this is what worries me, when too many people are in the same camp, that is usually when they're about to be wrong. So many are of the same view that we need a deeper down leg. And that's risky. When people start agreeing, and too many people start agreeing, they say, it's coming, but not yet. Most people are in this camp. Down here we go before we recover somewhere up. And that indeed would give us some form of our first structure, our second structure, and our third into the symmetrical triangle that so many of you know as basic technical analysis is what, whoops, let's undo that line. That was a bit leery. That so many of you know is what we are essentially calling. So let's be clear. Long before anyone else had this concept or idea, we said to you, it is highly likely at this point that we are going into a grand macro continuation structure pattern. And everything that's happened since has continued to underlie that. We highlighted this grind. We said this is going to be a down, and down she came. We thought it might be over there for a 2, and we were absolutely wrong. It went up here, and we had our reset spiller that brought us down to there. And then we had the reflation back. So there is an air jacket on this surfer. He got dumped by that wave, but he came straight back up. In other words, there's an air jacket that's good for the 8,000, the 9,000, and the 10,000 level. So this is what I'm saying to you. The first opportunity for a first cup, if this came early, would catch everyone of retail crypto by surprise. Hear me now. If this were to happen, it would catch everyone of retail crypto by surprise. I watch the streams. I haven't been tweeting a great deal on crypto. Most of what I'm doing on crypto, I'm sharing in the community. I'm here to tell you that Ethereum was our chosen alt and that our guys have been getting in over the last few days at lower levels than it is now. You could have been that if you elected to. There may still be an opportunity and a pullback, and I'll tell you why. You may still get your chance. And we will cover the minutiae of the technical detail for that now. But I want to make sure that everyone understands we are officially on HVF method, high alert for the eventual big main event that we do not intend to miss. This would represent a very early break. Typically, we don't expect that to be the cup that we lift. We don't expect to get the gold nugget on the first cup. But in a 5 opportunities, I'll often have 3 entries where I'll eat some red and I'll get it right on the 4th or the 3rd in the middle somewhere. Okay, so that typically happens. Occasionally, it breaks early. And that is a possibility. Remember, part of what's driving this anti-fiat, because Bitcoin and silver, precious metals generally, are anti-fiats as a category, is the absolute proliferation. Someone to tell me these FX markets aren't rigged, that a nation state releases 750 billion euro and that pumps the euro up. Because it's great that they've achieved agreement. Isn't that lovely? They're making things happen. They're doing things to support the COVID recovery. Like Europe, it's all about COVID. Oh my dear, what a mess it was well before COVID. What a pandemic it is. Anyway, never mind. That is all happening. The euro goes up on that. Oh, it's cooperation. It's all love and light. The Italians are falling apart. They need a large slice of that money. Believe me, they'll be going back to that trough and doing further and more. This is proliferation center. People are realizing that the numbers are getting insane. More family offices, small home offices, more retailers, grandmas. Someone tweeted that their grandma for the first time is asking about how to get Bitcoin and is starting to understand economics and the nature of the proliferation. We're going to start to have a fatter pipe that bleeds into the crypto realm. And this could, on much smaller levels, this market cap of Bitcoin is sub 200 billion. Wow. I mean, Apple is $1 trillion plus. Amazon is $1 trillion plus. Single equities are 5 times. Single equities are 5 times, guys. Okay, so that's a little bit on the big time frames. You understand where we are. Are you a relative high 3? Now, there's a couple of things that might happen. Maybe it isn't, and it goes a small bit higher, because we're going to talk to you about what we're seeing in here. And I'm going to go put the microscope on there, and I'm going to ask the question, and I'm going to say, could you be a little springboard for a potential major move that we never reach down for? And that is what I'd call the first cup gold nugget. Not the most probable event, but a real possibility. If enough people have a try at my 5-cup game, 1 or 2 of you are going to pull the gold nugget on your first go, and 1 or 2 of you are going to pull it on your last go. And that's just probability. Okay, so we're asking, could that be the best entry you're never going to catch on any other YouTube channel as a result of people falling asleep due to fatigue, all-time high caller fatigue? Everyone, today's the day. I'm saying that zone has started. How long might it take? How long might we be in red alert before the full war breaks out on the Bitcoin upside narrative? It could be, you could be in red alert period for quite a period, but never as long as all the other all-time high callers there and everywhere else each time we got an upside move gave you. And you'd be absolutely exhausted with stories of dangerous wolves if you were listening to other arenas. Okay, so let's talk about time frame. If we're saying that's our lower 2, this was your distance from your low 1 to your low 2. I would expect the maximum I would anticipate would be around 60% of the time of the previous impulse. In other words, if you were at your low, and that was around about December of 2018, and you're at your low again in the March collapse, You've gone from essentially December 18 all the way through 19, 12 months to December 20, and you've gone 3 months to March, yes? 2 or 3 months, let's call it 3, be aggressive, stretch it a bit, be the most expansive we can be. So you would have a year and 4 months. A year and 4 months, so that's 16 months. I would say 60% of that, within 60% of that is my expectation that you will have almost certainly broken out. So at some point between there, that event will have occurred. So what is 16 times 1.6 times by 6 is 6, 3.6, it's about 9.6 months. So I'm saying 10 is your long stop date, and any time from now. And I would argue the midpoint of around 2 to 5 months possibly done, if you were asking me for my best guess. So that's like me saying on your second, third or fourth cup, you're going to get the nugget. I've kind of blocked the meat in the middle. You're probably not going to be super lucky, but you're probably not the unluckiest dog in town either. Okay, good. So that'll give you in terms of time frame, but actually things can rush as you start getting to the big business end, and there's a lot of overextension in this. There'll probably be a news event that will kick in. Now I want to take you into the lower time frames just to show you what's been happening. So we're going to lose the big 20 high. We are in log scale, and I'm going to show you this. Here's what I think the most probably is happening. So I've said to you, it's possible we're on the first cup gold, but generally you don't pull the gold stone on the first cup. Here's what I think is happening. I think we're going to get a higher high 3. Why do I say that? Well, we're going to push higher on our high 3, and that's a good thing because the target it'll generate is higher, and also it means we're going up, but it also might mean there's a little bit more time. The break isn't happening in the next day, week, couple of weeks or so, but we are continuing to move deeper and deeper, and the fuse is burning longer and longer, and the amount of spare fuse is getting shorter and shorter until the actual event occurs. And that's because of this structure that we're seeing over here. I'm expecting a very moderate pull down and an upside break. And the interesting thing about this particular setup is that it's going to take you beyond the previous high over here. And that means in Dow theory that you have a higher high after a higher low. Remember, this is 4K or just below, and the previous one was 3.2 to the left, not seen anymore. So in essence, we will make a higher high than this previous down leg low. That means we have ended with the down leg from RH2, the second high. So let's go up and show you where that high, I've hidden that a little bit. So let's pull that high into shot so that you can understand a little bit better. So once again, the key events that occurred here. The key event was what we just taught about grind lines. Our guys understand that was a 6-8 run of the lows here that kind of got you out here. You did have a nasty snapback to sit through there on that downside. We are saying this overall down leg, let's use a different color there. Red is kind of bearish. Let's just use a different color. This overall down leg that you've had from RH2 ended with this final capitulation. Here's something about price behavior. Free information for all of you. It's a free learning point. Take it and use it. Often, at the end of a down leg move, you get what's called a final high momentum capitulation. This, of course, was accelerated by fundamental events. Fundamental events do not undermine a technical story. When you're looking technically, just look technically. There's always a story why something went up or went down. We know what happened. The stock market wet the bed. All the leverage traders wet the bed. They got flushed out. It's also one of the reasons why it was so extreme. That doesn't matter. Technically, it meets the narrative of a broadening down leg, which is showing a beginning of resistance and less clarity about pricing, with a final squeeze capitulation and a subsequent snapback. That ended. This was a clear phase end point. Lots of gray lines. That was a border line for me. And since then, you should be treating this now as the beginning of the next phase. The beginning of the next phase, which makes this a possible third high. But now I'm saying to you, my better guess is that actually we are going to go a little higher for our RH3. So this is me saying to you, potentially, on balance of probabilities, not as a recommendation, I may, and my Bitcoin and crypto community in the premium side, may well be sniffing and buying along the lows here on Bitcoin for an upside move. And that upside move could well indeed take you beyond this high and maybe even beyond some of the levels here. You can find out, if you want to find out more and where those targets would end, you can go and jump on board and have a call, phone someone to get started. If you're free view here and you just want to get the best guess out of me, that's also fine. Mini series as well, cost nothing, we don't spam. Okay, so that's essentially what's coming. There's a bump coming up. How do I be wrong? Every time you must ask, how do I be wrong about this? What happens is, instead of this looks quite perky, by the way, this move, but instead of it, and I'm going to drop the time frame now that I've just shown you where that end of that down leg has occurred, so that we can concentrate a little better on that structure. How do I be wrong? We get a hard sell-off over the weekend, and it comes really flat to its last low. Let's try that time frame again. In other words, how do I be wrong? Answering the question, how do we be wrong, so that you know that we're going off script and it's no longer such high confidence. How do we be wrong? The move to the downside is violent and comes very close to this low, and we end up with a bunch of lows that are on a very small ascending plane, and you get a weak rally that is very bear flag-like or rising wedge-like, one of those kind of playbook structures. That is then setting up for a downside break, revisit our grind line and spiller. It'll be a thriller. It'll be all the way from Manila, and it could then lead to a new low for our relative low 3. We've already identified levels where that may be in the event that might happen. This is probabilities game. Nobody knows for sure anything. So that's something you can watch for if it happens. I don't suspect that. That's not my priority, but my view will change if the price behavior changes. More likely, slightly bear flag, slightly falling wedge sell-off. That could do something like this. Let's try that jaw again a little bit better. Something like this. And you get a little bit of an easing after a bit of ups, bit of downs. No real great dominance to the seller, but slightly more winning by the bears a little bit over Saturday morning when everyone's gone shopping and is buying all their alcohol because they're allowed to buy alcohol there. South Africa, you can't buy cigarettes. You can buy alcohol, but you can't buy cigarettes. And then Mr. Zuma's company is now marketing its own brand, and it's illegally available. And British American Tobacco wants to sue them because their brands all can't be sold. Isn't that hysterical? It's an amazing thing what corruption does. Anyway, that's a little news sidebar for you to have a giggle at. A little bit of a drift down, and then we break. And the break will be the takeout of that third and final high, and you could get a good move. We may well be in that. We may well be in it. We want good entries. This overall is my probability. I think we go a little higher. We maybe make, north of the 11,000s potentially. We've got real levels that we can calculate as a result of HVF method, and you can have a go yourself. But then maybe after making those points, we have a down leg again. I don't know if it will come back and take this out. I don't know. In other words, this could be our third high, and this could be our third low. So on the first cup is a gold nugget scenario, which will catch everyone by surprise. No one's betting on the first cup as a gold nugget. They're all betting on number 2, 3, and 4. Therefore, they're sleeping and relaxing and playing baseball, and lockdown is lifting. They're being distracted. No one's watching the weekends particularly. Let me tell you, sell attacks and buy attacks have happened many times over the weekend, particularly Sundays as well. So you could, in fact, be on that third high, and it could be as tight as that. And this little fella could be an overperformer that kicks off the main event. That is your first cup gold nugget that will leave most people behind. Retail crypto will be falling asleep this weekend and could miss the first cup gold nugget. I'm not saying the first cup is the gold nugget. I actually think I'm in the 2, 3, and 4 camp, and I think we go a little bit higher and we top out and we have a different form of down leg that may come down to these levels, may go a bit lower subsequently. I think there's scope for that still to happen. I'm like in the middle where most people want to be, but I refuse to miss out if I'm wrong, and I'm prepared to eat some red. In other words, 3 entries, even 5 entries if I have to. I will not miss the leverage trade. I'm already in on the investment, but I will not miss the leverage trade. It's a cost of doing business. Size correctly, understand stops, and make sure you don't miss. I will take this, and I will not close it at its target. I will keep some on in case, my friends. The dream of all crypto dreams is here to make you gazillionaires once again. And are you going to keep more than 3% in the next bear markets? Or are you going to give it all back again? You're going to feel flush and great and be Lambo catalog shopping only to be back in the doldrums again. I say to you, do not do it. Do not. If you happen to have the good fortune, to be correct, to make sure you cover the risk of the first cup gold nugget, then you will do just fine, and you will make sure you keep a large part of it. Okay, so even if you're not going to, you don't think we're going to have an early dawn break that's going to catch us all sleeping and the first cup event is going to occur, you still have a real technical pattern that on all balances of probability should break to the upside coming. That's on Bitcoin. That's on Bitcoin. Georgette of Adelaide, I thought you said in your precious vid, that's precious metals, that we are not in the bull market yet. She's talking about silver and gold. We'll come to that later. I've certainly said we're in a bull market on precious metals a long time ago. When we took out the 1350 and we triggered on gold and silver, we've been in gold and gold against the pound and the euro, mega upsides. We have targets. We are definitely in bull markets in precious metals. I'm afraid, Georgette, you've been misunderstanding or not following for long enough. Okay, so this is a potential trade. What about the talk of Ethereum? What brings us to this? So let's get to the point. Let's get that out of the way. It's a bit buggy today. So we go to Ethereum. Now, here's the thing with Ethereum that's interesting. What time frame were we on Bitcoin? I want to do like for like. That's a 4-hour. So I'm going to do the 4-hour for you on Ethereum. So the 4-hour on Ethereum is also very, very interesting. So me and the gang were getting involved round about here in the Ethereum trade. Premium. We're talking about this for the last 3 days now. We really like it. I put a strong word out on it. And so far, it has overperformed Bitcoin. So from the first day we had it, actually Bitcoin was overperforming in the morning. And by the afternoon, Ethereum had gone up more. I need a coin market cap browser. So, oh, there it is, actually. Already have one. Let's just refresh it. See here. 0.3 and 2.74. How did a single method, and by the way, Tezos was weak. Tezos is stronger right now in the last 24 hours, but actually Ethereum has been number one. Cardano went on a bit of a flyer. I'm not trading outside the top 10. And when I look at the structure of Cardano, because I saw it when it initially broke, I'm quite happy not to. Remember, liquidity, sustainability, and ability to trade count for more. So in that, Ethereum has, for the last 2.5 days, overperformed just about every one of the top 10 since that morning when Bitcoin had gone up slightly quicker in the morning. And that is when we've been going. So it is the current choice. It is very pretty, it's got good structure, and we tend to trade our best patterns. So let's just draw that. I'll use the silver again, and that is how she looks. And that is roughly when you should have been buying. And I will illustrate that, in fact, when we look at Ethereum BTC, there is possibility of upside further, and we've already seen some against Ethereum and BTC. So BTC is a much harder taskmaster to go up against than the dollar right now, as you appreciate. In fact, most fiats appreciate on the in terms of what we discuss. But we'll go to it, and you'll see there's even a little bit of not perfect structure, but likelihood for a bump to the upside. So that would be roughly your entry. I should have had that arrow in green. That would be roughly your entry. I didn't nail it. And a good place on a nice impulsive move. And you can have pretty tight stops, and we've got a very good number on the upside. In fact, you're going to go beyond 250 if the bigger target is performing. We've also done a little fractalized targeting for just that, which might see us take a little bit of safety money off just in case we don't get full performance. So here you go. You've got crypto likely to do a good thing this weekend out of us. You've got Bitcoin as one of the potential trades. You've got Ethereum as one we suspect will outperform Bitcoin. In other words, once this is played out, we sit together in 10 days from now, maybe a week, maybe 7 days, could be over in 5 days, who knows, 5 to 10 days, and we ask ourselves, how have we done? Crypto generally will be higher. Ethereum and Bitcoin will be generally good performers out of the top 10, and Ethereum will be a slight or maybe significant outperformer to Bitcoin. If that has happened, then everything we think that has happened will have played out in that 10-day, 5-day type period that we expected all to happen. So currently I'm talking my book. My guys know I'm leveraged long on Ethereum. By the way, a little trick. If you can trust yourself on high leverage platforms, if you can trust yourselves and you understand money management, there is more liquidity for moderate size on a derived platform than there is on the exchanges itself. It takes ages to get filled on the exchanges. Why? Because too many retail traders got 98%, 95% of their net worth destroyed in crypto. So now they're buying 0.2 Bitcoin, where previously they were buying 20 Bitcoin. Now they're buying a couple of hundred Satoshis of Bitcoin when previously they were buying half a Bitcoin at a time. Now they are buying 1 or 2 of Ethereum, where previously they were buying 200, 500, and 1,000 Ethereum. It's a great pity. I need your liquidity. Don't get blown up. Come and take the other side of my trades, please. So derived platforms, derived platforms are useful. And I know some people have views. Oh, they're bad. They're flashing, crashing in the whales. Generally, if you're making money, you're not complaining. And I can't complain on the derived platforms, and you can get bigger size in. However, I would still do small, moderate leverage on my medium pot through the normal channels. That would be your Kraken, your Finex, your Stamp, etc., etc., etc. And you're welcome to do that. And that's moderate. It's not too aggressive, and that's safe. You have the safety of moderate leverage keeping you in check. Do not use. Margin is not to be used beyond 50%. Truly it isn't. That's too excessive already, generally. For those of you that look at what's left of your margin as opportunity foregone, you should be at 95%. You're playing a dangerous game. You're going to get blown up. You're probably not adhering. Even on your lukewarm, which is the likes of those that are offering you 3 to 5 times. Be careful, be careful, be careful. Truly, money management is your biggest downfall. Okay, so we've got a potential of Ethereum going higher. We've got a potential of Bitcoin going higher, and we've got a potential of Ethereum overperforming. Let's have a look on the bigger time frame where I assess this might take us on Ethereum, because we did the big time frame on Bitcoin. Remember, in some senses, Ethereum has got so much previous ground that's covered, and it's still so low down in its recovery. If we are to have a big crypto recovery, and I'm going to log scale this as well, This is truly, truly still early doors for Ether. Okay, look at the high volume that was occurring that came in eventually at these lows. There are serious buyers at these levels that may know something. Now, this little structure that we've been talking about in Ethereum is over here. It's already begun. I expect it's going to bring you potentially to close to, maybe not making a new high, but to previous highs before it maybe has a small rest. So if we have a look at the key levels of significance on Ethereum, this is on a log scale, remember. So these lows were very, very close to each other. There's clear buying support. I should probably do those in green to illustrate that there is a strong level of buying support. That's your buying support box. In your post mega bull and subsequent bear period, there clearly has also been some selling at key levels as well. So I'm going to change color and show you this. So we are in a zone where to revisit previous highs. Let's try a redraw on that, do it a little bit higher. Those are kind of the zone where I'd expect you maybe to start to have a bit of resistance when you start to make progress back in there. But for other points of interest that you should remember on the Ethereum chart, that was the grind line. That was our 6,000 Bitcoin collapse call. This was our upside call on Ethereum with major overperformance. We have a key funnel level that runs through here that we called would be broken on the downside on that grind line many years ago. We said that will be broken to the downside. You broke it, you had a rally, you broke it. All the time while Bitcoin was holding the 6K, the alts were bleeding out. There were all these fluffy alts that were all listing on the Ethereum network, that were all being liquidating to try hold on to whatever they've arranged, had as cash. So that was the final exhaustive low. We saw how we got bounced out of it. But remember something. Remember something. We are still in the blood basement. Think of the movie Saw. The nasty stuff happens in the blood basement. This is where you are in terms of this. If I just go back to regular on the scaling, there is a lot to be done. Now, if this turns out to the long, rounded, basing out bottom, you could have a very strong period for Ethereum on the bounce back, particularly if Bitcoin is playing along. It doesn't have to be super awesome. It just has to play along and be moderately strong, not too weak, and stable in key moments. So I'm going to throw that down there. There are a couple too many fibs on there, so I'll take this little one out. Let's just have a look at it for pointing purpose. And you will see that right up top here, 395, which is just before that grind line spill and then running the funnel. These were key levels. That was when you entered into the red zone back here. That was when you entered into the red zone, and you've not come out since. You broke into the red zone after breaking that grind line. You fell through the funnel. You set up a small continuation. You fell further. Another one, that was the 6,000 mark. You went into final lows. You did not even meet the ceiling on this up leg. You came down. Again, you didn't meet the ceiling. You came deep down almost to the previous lows. Important that it didn't make a new low, however. That is your all-time Ethereum low. And now if I just put the eye on just temporarily to hide all the draws, now we are working our way back, and this time it could be better. And if you look at the silver chart, it's actually quite a bit like this. If you look at the silver chart, it's not as advanced in its bull market as the gold is, and in the same way, Ethereum to Bitcoin is a bit like silver is to gold. But in the same way, Ethereum can be higher beta, silver is higher beta. So Ethereum can play catch up at a fast pace. So we're not haters of any coin. And at the moment, it's probably the most serious other alt in my view. Let's have a look at some of these comments, because I am doing a whole bunch of talking here. Let's see. So someone wants to say everyone is bullshit. He says, Satoshi is watching, says someone. So you're saying third cup could be gold or the big short. Hit the likes, guys. Yes, I appreciate that. My man from India in Arrow is asking for the likes. 609 of you watching. You're getting a warning that there's a slight risk. The game of roulette, the game of Russian roulette for missing the big Bitcoin trade has started. Are you going to be the guy that puts a bullet through your head and misses the Bitcoin, the crypto mega pump? I've never said before this point, I've said it ain't ready yet. I've called bears when others have called all-time highs. We've not always been right, but we've never put you on red alert. We've never put you on red alert. I'm putting you officially from now, red alert. Red alert. I would say maybe amber alert for the next 6 months, and we could go into a heightened red alert. So let's say amber alert. You could this weekend, if we broke out of that smaller structure and it had abnormal power and somebody does something insane, you could find that there's a weekend strike. And how many times has that happened? Remember, this market trades 24/7, which brings me to another bugbear that I truly, truly wish to kill. This is something that really, really, I think irritates me immensely for a lot of commentators, supposedly giving advice to other people on I want to show you a thought. I wrote a couple of thoughts down, and one of my big bugbears of crypto is the futures market. So guys will come on and say in the futures markets, hey, you guys, there was a major gap on the futures market. We've got to close the gap. And then they'll regularly be proven right that the gap ends up being closed. And I want to say to you, you can't have gaps. It's not a real gap. The futures markets that trades Monday to Friday, you do not have a gap. Yes, you can see a gap, but if it's traded through all those points on exchanges, it's not really a gap. It just means that market was closed for those days, failed to capture the data of what was happening in the exchanges. A significant enough move happened over the weekend, and you're now opening up some way different to where you closed. That is giving the futures markets a gap. And people want to apply gap trading strategies to something that never had a gap in many instances and traded quietly, just drifting off on the exchanges over the weekend. And I see countless strategies on gap trading, the futures markets, which actually just switched off the data collection for 2 days that was busy going on in exchanges. That is not a gap by the traditional understanding of gaps. Gaps occur when all exchanges are open, the option to trade at the next logical price point is foregone, something has happened, and the entire market craps itself or gets exceedingly bullish and gaps down that there's no volume because no bid was in the bid and ask stack. Not because some Monday to Friday exchange doesn't play on weekends when everyone else does. So just because you have a data gap doesn't mean you have a true gap. If the real markets are the exchanges, they were open and every price point in between was reacted to. So that is one thing that I really, really wanted. And I see tons of guys saying, and we've got to close this gap, the futures gap, and all of this. It's nonsense. It's a bit like I have my own data feed on the stock market and I switch it off on Wednesdays. And then I say, guys, do you know at the end of Tuesday and the beginning of Thursday, we've got this huge gap. The stock market will go, what are you talking about? It traded on Wednesday. There are no gaps. Okay, so I hope you just understand that. That's a little bit of a bugbear that I see on tweets. Every fifth guy, oh, gaps on the future market. If it didn't gap on the 24/7 market, it's not a gap. End of. Boom. The people that are trading in real exchanges, if they traded at that price, it traded there. The fact the future has to catch up with what's happened over the weekend and then just segues to where it's now at doesn't mean you have a gap. Okay, you have a gap on their data because they're dumb enough to switch off when they shouldn't be. Okay. Smash the like, says Georgette. My kind of girl. John Shaw, the crypto sniper, Francis. I think platinum may be breaking an HVF, he says. Yes, we've been watching platinum. Yes, agreed. Only trade small percentage, says Jim Brousseau. That sounds like sensible advice he's offering. Why does it always fill though? Because we are in a market which is regularly trading up and down. You've just got a macro continuation pattern where you've gone from 700 in 2017, you actually at some point in that year traded 700, to 20,000, and then you've had a bear market and then reinflating bull markets. You've been going zigging and zagging across the entire price range because you are in a super macro continuation pattern that requires testing of levels and swings up and down. So it's like, why will we trade $11,000 again? Because we're moving up and we're moving down in a continuation pattern. I won't say, why will we trade 4,000 again? Because I don't think you're going to see that again. However, I'll adjust if we do. That means our macro continuation scenario on Bitcoin is in fact wrong. So they fill because you're in a zone where the people continue crossing the road over left and right. Once we've moved on and we've gone into new territory in Bushveld, it'll be a different story. You are in a macro continuation pattern. And that means you are zigging and zagging across the range and tightening. So any levels between 7,500, 8,000 to 10,500 will repeatedly be revisited a few more times, in my opinion. Any futures gap that is created in that range, we'll see it. It's like, why will we ever trade 10,000 again? I bet my bottom dollar we trade 10,000 again. Of course it will. It doesn't mean, it's not meaningful in terms of the technical analysis of a gap where there was a real critical event, technically, that occurred 1 minute there, and then the news was out, and a minute later everyone reassessed and ran for the hills. That is absolutely different as a technical event to switching off the power for 2 days. Okay, so who else? I think I've answered about gaps because they misinformed, Georgette. Tezos and Kyber Networks, people, says this gentleman. Tezos crept into the top 10. Not looking bad. I think they'll all go a little bit upside. So here's my thought on ADA. So someone's asking about ADA. It's the only other one that's gone higher so far. And it did have a little bit of our structure in it. It's just messy. And in the long run, I always anticipate the best pattern wins. This is your messiness of ADA. It's kind of in there. Was a bit lower slung than Ethereum, but because it's a higher beta, the more you go down, the deeper you go into shitcoin territory, and I'm not calling ADA a shitcoin, I'm just saying smaller market cap, the more higher beta you're going to get. Does it make more reliability, and will you make more money? I never made money trading penny stocks. I can tell you that. Small caps and all of that, chasing in. You need liquidity, and you don't get the same level of reliability. ADA is not a penny stock equivalent. It's a reasonable cap. We traded it when it was all fame, but this is not as neat as what Ethereum does, but it's happened to have a bigger pump. It takes less money to push it up, and it will take less money to take it back down again. It's a less assured market, because there are less voters voting with less amounts of money. So you get into more sketchy, skippy, fuzzy markets. Even these charts with these wicks look a little bit foxy to me. And that's on Binance. You know, they all look a little bit like the pubic hairs have had the same trimmer on them, if you know what I mean. It looks like, along the bottom, along the top. Yeah, I don't like that. I don't like it. Life isn't that even. That smells of bot. It smells of algo. It smells of anything. These markets can be moved on thin money. And they know momentum brings in retail money. They can pump you in and wash you back out. I like liquidity. I like big opinion. You get a better valued market when you get a highly supported one on greater volume. That is a key lesson and learning, everybody. I need to see at least one smiley face for me bringing in pubic hair with alt markets. I mean, come on, that takes creativity. Let's see it. No one laughed. Okay, I'll have to go back to comic school. Anyway, so So it's decent, but not exceptional. This move up, the fact that it had these humps just before it and was kind of humping out a little bit. Let's just do that. A little bit, and then nasty, and then it very low vol, very pubic bone trimmed wicks there, little pump. And then again, it's a little bit inconsistent. We like a nice exhaustive high. I would have liked that to be a high one. I would have liked a structure with real squareness. We want quality of technical analysis. I never forego in the long run. I never chase the one with the highest bid percentage. I always chase the best pattern. And in the long run, it often balances out to be the best one. Okay, good. Some laughter at last. That's good stuff. There's about 10 seconds delay on the feed. Good. So that was ADA that we've done for you. FBTC. FBTC. Let's just show you this again. Look, it's a bit flat bottomed along the bottom. It's not what we'd call our classic bread and butter, but it points to a better performance from Ethereum. This structure. There's real base there. There was a bit of trimming across the top, and we have done a fib from here. We have passed the 50% level. That means something to us here. In fact, we were getting in on this little pullback. We got a hammer. We got follow through. Ever since we chose Ethereum over Bitcoin, it has been overperforming on the FBTC chart. That's what you want. Remember, the game here is building Bitcoin value. A large amount of time, I've said, you don't have it in the alts, stay on Bitcoin, because at least you build Bitcoin value and you also build fiat value if you're getting in the right time on your Bitcoin. And if you're trading on others, you can make Bitcoin like on BitMEX, etc. If you're using moderate, be careful of it. If you don't understand money management and leverage, guys, trade it moderately. But you can, and I've shown you that you can grow fairly promptly, small amounts to bigger amounts. So also, by the way, the Ethereum trade can be taken there, because it's a significant enough alt, and that's what I've done. Okay, so we're seeing this is actually at highs for this wick now. I'm expecting more of that, and the possibility it goes a little higher before maybe resting a little bit, and then actually I think we get overperformance from Ethereum BTC. And let me tell you, I am the guy, this is new from me, I don't say this every day. I warned you about overperformance Ethereum once before. I think it was about a month ago, and we took that, and we took a lot of positive BTC out of that, and we prioritized Ethereum actually over Bitcoin. But generally, I've been the Bitcoin dominance guy. We haven't looked at the Bitcoin dominance chart, but I've warned you, and that's broadly been the right approach. We've gone from about 30% at the lows all the way up to over 70 at one point, and we're probably around 66% still on dominance. That means stay with the big liquidity. You get so many advantages with big liquidity. You shouldn't give it up for a little bit more. It's a much higher risk when you start going to the alts. So there's two links in the chain. Let me explain to you, if you're trading your favorite alt, not only do you need that alt to overperform and to do awesome stuff, you need Bitcoin to at least be doing well. So you actually have two variables to win. Bitcoin must do well, or at least stay stable to moderately well, and then your alt has to do exceptionally. You need both of those things for you to make money in crypto land. If you just trade Bitcoin, you just have to be sure Bitcoin's going to do well. And if the dominance is looking like it's still bleeding up, you don't have to chase a few extra points on some low liquidity coin. That's your game. So there's a second link in the chain when you drop down and you want an alt. That's why we've got to be sure that the alt against the BTC is good and that BTC looks good. And I still, when I trade the alt, will often put a little portion of BTC on as well, so that it keeps me watching the BTC. If the BTC turns super ugly and turns down, you may get the alt outperforming for a short while, but in the long run, Bitcoin drags it all down. Bitcoin is the crypto market by coin market cap, guys. We've got to understand that. You can't hate on Bitcoin and love an alt. It's a terrible idea, because it's kind of like your left hand fighting your right hand. Nobody wins in that. So if we just look at the total market cap, 173 billion. Let's get my maths numbers right. I'm starting to sound like Donald Trump and Jacob Zuma. 173 billion. The next biggest, 24 billion. Next biggest. So you're 25 to 175, basically, in a short sum. So one is 7 times. Let's just get that clear. Bitcoin is 7 times the market cap of Ethereum. And Ethereum, compared to Ripple, which is now falling behind Tether and is the perpetual bleeder. By the way, last time we streamed on crypto, what did we say? You want a permanent safety trade, remain short Ripple against BTC, and you will accumulate BTC. Stay BTC long, go Ripple short, and generally you've done just fine. And it's absolutely been the case, and I will look again and show you the charts again. So we've left ADA and we've said, yep, it got a little spike, but we don't have to be in that. We don't have to chase in. We go XRP, BTC. And what have I said each time I've come to this chart to you? It will probably go lower. It will probably go lower. If you want a crypto hedged trade, regardless of cryptos go up or down, you want to make money. You want to do the relative valuation of one crypto against another. That tells me lower. That tells me likely lower. That looks like a minuscule bear flag. Ripple is a bleed out. It's one of the easiest. You can set and forget and leave it on, and you will accumulate Bitcoin. And I've told you last time as a free trade, and since I told you, it's fallen lower. In fact, I've flipped this chart. I'm going to throw this out to you. Let's see it, snag it. Let's go. Whoop, 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 whoop. Hold on. I'm going to get to my library. I'm going to flip out this chart to you where I've essentially done a theoretical draw on the inverted chart of Ripple BTC. If I don't find it in a hurry, I will throw it out post this draw, which actually implies, let me do it then, I don't want to tamper around and be looking in my laptop. I will throw out a Ripple BTC, what I call a worked draw. It's not highly compliant to what we've done, but it's adequately so, and it's pointing to 12,000. It's currently 22,000 Satoshis, 21,000. That's looking at a 12,000 number, falling through the 13,000. That's about 65 to 70% from here. So if you put 10 Bitcoin into shorting it, you'll come out with 16.5 Bitcoin. You put 1 in, you'll come out with 0.7 or 0.65 of a Bitcoin extra if it makes that target. I'll throw that chart out on Twitter. What do I need you to do? Go follow the Crypto Sniper on Twitter, and I will throw it out. And you can see a scenario cast, which I gave you free the previous time. I've subsequently shared to our premium guys. They've had access to it for many days, so they won't mind you having a little look in retrospect, and you can grab it. And that is on the Crypto Sniper. Don't forget to hit the bell right now, by the way, as well as the likes. If you dig it that we don't do ads, hit the like button. We've got 289 out of 629 watching. That means 60% of you would prefer to have adverts. Maybe Amazon. I can do like CNBC and advertise Amazon for free and tell you how their staff are awesome and their hands are clean and they won't give you COVID and your parcels will arrive safely at your door. And then you can see all the little cubes. I can put my little box next to CNBC and all the other little states, independent newsreels, and you can watch us all say exactly the same thing as the state and mass media now does mass marketing for an oligarchical company that does the one world retail order. Or you can have no ads instead and say, I dig this channel. I don't have to watch ads. Okay, so if you've hit the like button, I've already seen 100 of you done that. I dig it. Thank you so much. And share and retweet, by the way. So let's just recap. What are we saying? First cup of 5 cups. It doesn't mean it's definitely happening, but you're gambling if you aren't ready. That means you need to be red alert. The amazing thing about TradingView, it's a good platform. I speak broadly very highly of it. You can set alerts, guys. You can set alerts on your Ethereum. You can set alerts. So if I want to put an alert around 250 on Ethereum, I put it there. If I'm worried about if it's going to start threatening my stop, I put it there. I drop a time frame and I can have a look at it. Let's scale that correctly. I can see what it's doing. It's already looking like it's shining up again. It's not coming off. It's showing a lot of relative strength. If it makes a new low, I'll put it there and I'll go there. If it's making a new high, I'll want a warning a bit before. there, and then I'll have a confirmation just after. This is using your trading view correctly. It's an awesome package. Use it. It's got so many features. We've got some real trading view boffins on our side. What about the Bitcoin? I did also say I'll cover silver and gold, so the PM. So I'll go to that next, but let's just verify on Bitcoin. I'm also going to do Ethereum Bitcoin. If it's going higher, I would like to see it go up here. Let's put an alert on up top there. If it ever came heading towards this lows area, which would be a concern. Remember, you always could be wrong. You've got to put alerts for both directions. Don't be so assumptive that you just can't see anything ever not working for you. Bitcoin, where's our ideal pickup point? I'd really like to know. That's on stamp. I'll leave it there. I'd really like to know if Bitcoin comes in and around these levels again. I'm not sure it will, and I'll certainly take a warning there. It's not yet as perky as Ethereum is showing perky, but I'd like to see if it starts on the way up and starts getting to previous highs, and when it runs previous highs. There you go. Simple way. It's all in there. It costs you nothing to do that. It means you don't get caught with your pants down. I'm here to make sure you don't miss the trade, guys. That's what we're trying to do. Hit like if you like the idea behind someone saying, I'm here to make sure you don't miss the biggest goddamn wealth building trade of your goddamn life, where you get a second chance to go to your previous all-time highs and beyond on crypto. And this time you're going to be that little bit smarter that you're going to hang on not to 8% or 5% of it, but to at least 60, 70, and maybe 85% plus from its all-time highs, because you'll have real method, strategy, and a channel that's looked after you. And even better, to ensure that you should be in our community, book by hitting get started and join our lovely merry men in the Sniper Circle community. Okay, so I said Bitcoin, we've set some alerts, I said silver. Let's talk the precious metals in final. So there is something interesting. If you crypto, don't just go, I'm done, I'm off. Buy a coffee mug, by the way, or a t-shirt if you like. What about the XAG, euro? So we said silver will go up. This is an upside HVF, and we prefer the structure of the silver on the euro. This is it, 1667, guys. 1667 is the number. You could trade this leverage. Now, many of you are thinking, I can't trade silver euro. I can only trade silver gold. Well, silver gold has also been our call on repeated streams. Repeated streams for overperformance relative to gold. Repeated streams, we have said, go and get your goddamn gold. Let's just get this, what have we got here? We've got silver euro, 1669, yep, that's it there. And gold against the euro, we know, we've told you what the macro target is. It's very close to 1700, it needs to go 1680. So it's going to come off, it looks a bit peaky here, but it might suddenly get a little bit of power. Let's bring that chart back into focus here. Gold against the euro. The gold's been a bit soft. It's not been as impressive. Silver is playing catch up. What was the key chart? Who else was streaming live to you to say the gold-silver ratio is turning, you need to be heavy in silver? How many times did he do it? Not once, but 5 times. The beginning of this year, in February, in March, in April twice, and now you're hearing in May, many times over. What should you be doing? Bleed outs. We've told you about bleed outs. It's in the technicals that we said. It's in a bleed out technical. You had a blow off high for the gold silver ratio, guys. You had a blow off goddamn high. Man, what a gift. It was silver. You had to do it. You got to buy it, not on once it starts happening. You see all these little, I've just done theory that covers these grind lines. We recorded it. My guys are getting it, and they're learning new technical content you can't learn anywhere else. Truly practical, tried and tested. And you can find out more about it yourself if you want to join the community. That is your gold-silver ratio. This is the great pop-out on the gold-silver ratio, guys. This is the great pop-out. This is huge. This was your rising wedge. Macro rising wedge structure. Boom, like that. There it is. You popped out the top. We even teach you about pop out the tops. Type 1s, 2s, and 3s. You'll learn about the rising wedges. And what does it mean? Potential long term, we're going to the downside on a big way. But the reason you couldn't trade wedges to the short side like you can trade upside HVFs and downside HVFs is the fact that they can do exactly this. They have a final, what did I say about capitulations when I was talking about Bitcoin into the RL2? You get exactly the opposite in final melt-ups. And that's when you should be taking your money off the table, when you get the final melt-ups. Now, I'm not saying to you on the macro of Bitcoin, you should be too early taking that. I think that will run and run. There are occasionally exceptions, but we have overperformance bands that we'll utilize for exiting there. But in the same way, before it fails, it first has an absolute melt-up. And that's what it's done. And let me tell you, this is reversed in a single month. In a single month, let's take the eye off. In a single month, that is as violent a reversal as it was to the upside. So if you don't think the gold-silver ratio is reversed, I beg to differ. Do I know for sure? Could it never go higher? I could always be wrong. It's an on-balance of probability call. But very few people that I know have called the turning of the gold-silver ratio as a high probability event. You heard it months ago here, and it's happening. And this is good also for Bitcoin. This is a crypto sniper, but I'm telling you this is good for Bitcoin. The precious metals bull, Peter Schiff is wrong. They are complementary, not adversarial. This is good for every anti-fiat out there. This is good for gold. It's good for silver. It's good for Ethereum. It's good for shitcoin X. It's good for Bitcoin. It is good. Did I mention that it was good? It's good. Okay, so that was your rising wedge, that was your turnaround, and that is your reversal. And gold against silver actually was a very, gold against, my apologies, silver against euro. If you missed the silver trade against the dollar, you could have jumped in, and some of our guys did exploit that. So let's show you silver against the dollar. Let's do that. We'll escape quickly, and I will take this chart and make him into a USD chart. USD. Now there's plenty of lines in there. Let's take some of that off to not befuddle you, and let's take those drawings off. Okay, so now we've got gold against silver. You can see again here, we have structure, we have targets, we've got the move. The dollar has been terrible. It has been piss poor in terms of its strength. It has absolutely killed all the things that we loved so much, our FX emergings. They've put that genie back in the bottle for now. By the way, all those macros still hold. None of them are stopped out. You just had such a huge spike that they've then been pulled back quite violently. Set and forget structures from when they entered are all still holding. Those liras, those rubles, the Canadian through 159 going for 160, all those things hold. But they've been put on ice for now. They still hold. But during this period of dollar weakness, this is the great thing about the markets currently. We got the metals. Dollar wants to be weak? Okay. Remember the YouTube where I said America has one foot on dollar and the other foot on the precious metals market and the emergings market. Emergings horse wants to get weak. The gold and silver will get strong. Anytime they let the emergings get too weak, you start to have a real threat of the entire FX system collapsing. Before they've got their vaccines, their pandemics, and all their other duckies in a row, they've got a nice little order that these things must drop. These shoes have to drop at the right time. They can't have one or two jumping the queue and happening too fast. It'll force their hand. So they've re-put the genies back in the bottle on the FX emergings by weakening the dollar, giving swap lines to everyone as dogs. Sure, have a swap line. You can buy more dollars. Here's some dollars for cheap. You never need go without. We'll print them. Don't you worry. All of the stuff. Proliferate. The whole thing. Okay? And then what happens? Gold and silver. And now, again, as I reiterate, a possible big weekend for crypto. Could it be very big first cup nugget? Small chance. Small chance only. But boy, would I feel terrible if I missed that. There's nothing worse than trying to chase up something that is going up like a rocket. I'll get in on the pullback. How many times have I sat around traders saying, I can't get in. It's gone up too much. I'll get in on the pullback. It's like passing 11,000 at 13,500. Yeah, but it's got to have a rest now. I'll get in on the pullback, passing 15,800. Well, you got to think that it's done so much. The first pullback I'm getting down, passing 17,900. Oh, damn it, I'll just FOMO in as it's going up to the 20K mark. Runs just through the 20K mark, has its first reasonable pullback, washed out, too much leverage. done. You lost. You knew the bull was coming. You sat there and watched the bull was coming. You were sleeping on the weekend. You weren't supposed to be sleeping. You then thought it had done too much, only now it's doing much more than it's ever doing because it's in a breakout of a major macro systemic continuation pattern that it's yet to have of this scale ever in its existence. And now you sit there waiting for a pullback that will never come, or all of them are too small and too short, and they keep going so much further. You can't bear to hold your nose to buy at 17,900 when you could have bought at 8,900, and you end up missing the whole trade. You add too much size and too much leverage to try catch up for all that profit that you've lost, and the first small pullback because you never did your sum washes you out, and you're deadbeat and you're alone, and all your mates that bought one Bitcoin and just invested and hodled are telling you how awesome it is and how grateful they are to you for telling them about it because they made a bundle of cash, and you are poorer than you've ever been, even after the bottom of the 2018 bear. Be warned. Be warned. You miss out at your peril, and everything goes pear-shaped from there because your emotionality is gone. You're in FOMO. You're in all sorts of bad mental drugs. It will see you in the grave, your crypto grave. So you've been warned. And that's what this channel does. That's why I think we're awesome. Hit the like button if you agree. Share it if you agree. I'm done with telling you all I want to tell you. Thank you for coming on. As I say, grab the link if you want to book a call. There's some serious possibilities. We're going to be walking with our community through each of the 5 cups, even if it's the 5th, and we're going to make sure that guys are in the trade. We will be assessing the relative strengths, most of the time only in the top 10 of the crypto coins, especially in the top 3 minus Ripple. The top 3 minus Ripple. Oh, that's hysterical. Minus Tether and Ripple, I'll be in the top 4. Yeah, that's it. It's a classic Francisism. On that great note, I say thank you for coming on. Enjoy your weekend. We may come at you on Reset Sniper or Market Sniper on a Sunday. We'll see. Book if you want to build your wealth. It's not for everybody. Trading does involve risks. This is non-advisory. It is entertainment. Get a t-shirt if you just want to support the channel. Oh, non-farm payrolls, link below. Join us. You don't know what we're about. You're not sure if you'll enjoy it. Non-farm link below. It's this Friday. Could non-farm be the big trigger? He says. Could non-farm be the big trigger? He says that could be the real blow-off. What if we get an absolute shocker of a number out of America? They've done it once. They've never done that terribly before. Remember that chart that went like this? Man pees off a 60-story building. Yeah, it was one of those. Well, what will happen this week? Could we get some real trades, real movers? Could it dovetail into some of the triggering effects? We could get a decent break this weekend, and then we get a second stage turbocharged boost as the Friday comes in. Do you want to be part of it with a community of like-minded? Come and join us for the non-farm link. It's all in below. Okay, thank you. Love you. Goodbye. All the best.